So, hello, everybody. How we doing? Rocking and rolling in a free world. 50 pips. Here we go. So, 30th of November, 2016. Welcome to OPEC Day. Welcome to the last trading day of the month. So, thank you for stopping by. Again, today's the birthday of the blog. So, as usual, try and do something special just to pay it forwards. No trade calls, no recommendations. Every sponsor of their own stuff. So I think the plan here, what we'll try to do, sound okay for everybody? I think the plan is we'll try and do a couple of live sessions, right? I don't want to make them too long because I'm going to try and upload them to YouTube. So if they're like over 30, 40 minutes or something, it might be a bit of a pain. But what I'll try and do, the plan is to try and keep the room open or open and close it. And, you know, we'll do a session here. Thank you, Peter. We'll do maybe a session into New York. And then we can do another session after the OPEC is done and dusted. Maybe get a nice spike chance to sell some crude. We'll have to wait and see what happens. So again, nothing's off the table. I really don't care what we do. This is just paying it forward. So any chart that's on the platform, just call it out. I'll be more than happy to review it. If anybody has any other questions, just shoot. We'll do anything. No problem. Nothing's off the table. So, okay. So looks like sounds pretty much okay for everybody except for Simon's a little bit loud. Let's see. I'll try and. Okay. So. Yeah, I mean, here so the big question is, yeah, again, just shoot anything you want to cover. Don't be shy. Any chart you want to review, we'll look at it. No problem at all. Yeah, what's going on with Euro? Sure. So our base case on Euro is that those 107s attract, right? So where's our Euro chart? Here's our Euro chart, right? So what we were discussing here was that we're broadly stuck in a very broad range, right? And what happened recently is we got this very aggressive move down. Right here we had pretty much, what is it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 down days in a row, right? And then we came back into this strong support. Now, as always, we always like to, fade extremes. So when everybody starts talking about parity, we try to look for a little bounce. So here, all things being equal, is Euro heavy? Sure, right? Is it likely going to stay heavy? Sure, right? But all things being equal, if you're thinking about, the chances of things happening, right, after 8, 9, 10 down days, chances are a healthy move would be to see some kind of a pop, right? So what that means is, especially once it's accelerating through this last resort, right, strong barrier support that caught it for all those moves up, the chances are, especially because the move is so aggressive, is despite the fact that the odds increase that we'll get some kind of a bounce, once it breaks through this level, does it make sense that the path of least resistance or the pain trade is to go to the next level of support, right? You would not expect it to try and bounce here, right? You'd expect it to go straight through, and this is the level you want to look at it. In the same way, because of this aggressive action, this is not something we would necessarily try to front run the level. We much rather either buy the level, right, a fixed level, or wait for some kind of a basing action. Here we had plenty of time, right? We had, was it 3-4 days? We're bouncing inside this area. So all things being equal, after such a big move, it gives you a fairly nice chance to try and get long, with pretty much this is your risk if you're wrong, right? Strong defense of that 105. And even into a healthy bounce, this is your reward. So in terms of asymmetric risk reward profile, it's already an interesting trade. Now, does it also make sense that should we trade back above here, God knows what, why, right? But should we do that, the next level to the upside would be this, And if we rip higher, this could easily correct all the way back up into the moving averages, right? That'll be coming into line here. You've got the 100, you've got the 200, you've got this descending trend line, right? So all of a sudden, this could easily correct all the way up here. Not saying it's going to, but it could. And this is still staying in trend or still staying heavy for a potential move back down to parity. So the only thing we're talking about is we don't, healthy markets don't move from point A to point B in a straight line. They don't stay, they don't move in the same direction for a sustained period of time. So we're just looking at interesting trade locations where we have an asymmetric risk reward profile to try and play for a healthy bounce or a continuation, depending what you're looking at. You could also be waiting to get short, right? So that's all we're looking for. So here, with this being the risk and this being the potential reward, or even on a scalp, this being the potential reward, we don't see any edge in trying to get stubbornly short. The only thing we'd be interested is to get long, right? Is that the only way to trade? Absolutely not. That's just the way we're looking at it in terms of trades. In terms of action, right? Not talking about trades here, what we'd be expecting to see here is after this bounce, we'd see price to try and move back into this 107 range, which is a pivotal level. If it gets offered here, you'd expect more downside. If we get daily closes above the 107, then you'd expect this to continue to try and accelerate back into the 108 10s. And at this point, we would expect fairly heavy resistance or heavy selling to come back into here. So unless something drastic happens, that we'd expect that to cap it. Now again, also in terms of seasonality, this is not a bad time for euro longs, right? To see this could still be a little retracement, pop back up here into December and then sell off back towards the end of the year and into January. A lot of people will be talking about January effect and et cetera, et cetera. But that's the way we're looking at euro, okay? So I don't know if anybody has any comments, any questions on that, but that's the way we would be looking at it. Yeah, I'm long euro, sure. We'll have to see if it manages to get some traction or not, but that's what we're playing for. Yeah, that's another interesting one. We've been fairly stubbornly short for a long time, and then we actually flat out reversed here, and it's on the Kiwi, right? So I think people who watch the Sunday YouTubes and stuff, they know we're fairly aggressively short all this range, trying to play corrections. Then we had to let it go. Decent trades to the downside, then we had to let it go, got another opportunity to get short here, we got a nice little run, and then it started to get very, very funky here, and then we got some other opportunities to get back short once it started to press lower. Here what we said is be very cautious, because our base target was still for a move back to the bottom end of this channel into the 200. Now we still believe that the RBNZ etc. are still going to ultimately try and keep this down, but here we're just getting a little bit of a healthy correction. So for us, the trade, and I left those up the other day, I didn't mean to, but so it's no secret, for us the way to trade this to the long side is, once we came back down here, we knew that we had 1, 2, 3 levels of support. We had 4, so 1, 2, 3. Fourth was the rising channel coming here, and fifth, you had the confluence of the 200 DMA, right? So the only way we were looking at this, hey Toronto trade, we're looking at this is once price had actually stabilized and moved back above the 200, we got long here, keeping our stops fairly wide for the rotation back here. Not a pure trade in terms of asymmetry, but we need to keep the stops a bit wide because it's very choppy, then gave you a chance to tighten up a little bit below this area. But right here, what we're looking for is this. It's the same thing on euros, just the correction of the dollar, right? And the move is here, what we would call primary correction is right back here into the 100 DMA. And in terms of potential extension of the move, that would be back into the 7270s. Now, also, if you look at the most recent move from highs to lows here. You've got the 50 back coming here. So this is going to be a fairly interesting sell zone, probably an interesting zone to protect the 72.70. So we'll have to see, but we'd consider the primary pretty much done here. We'd much rather continue to ride euro than ride Kiwi to the upside. And again, here it's all the, hey Anna, how's it going? Here it's just the exactly the same trade across the board, right? Yeah, you know, we'll have to see what happens here on the on the weekly or on the monthly, right? This could be fairly ugly if it closes negative on the month, right? But it's very choppy. Here it's just essentially the same trade across the board. So again, people have been following these the YouTube videos and stuff. You know, our base case has been for a long time bonds down, right? Correction on yen. So yen up and basically, you know, dollar correction, right? So once we got that post-Trump, post the election, we took profits on most of those trades. And our assumption is that we're going to see a little bounce and then, you know, stuff will start to move back into play. But for now, what we're looking for, especially into the end, now we have to get through month-end flows, but at least into the FOMC, we'd be looking for a little correction of this dollar move, right? That's all. And then we have to wait for the FOMC and then we'll see what happens. So that would imply for us is, you know, dollar sold a little bit, right? So euro up a little bit, bonds bouncing a little bit, interesting bounce on bonds. We'd expect gold to bounce a little bit and, you know, a little bit of profit taking and this move to start to unwind a little bit into FOMC. And then it's going to be game on again. Hey, how's it going, Tim? It's just going to be a little bit of a game on. And again, have these moves been easy? Absolutely, absolutely not, right? It's been fairly tricky, but, you know, it is what it is. Nobody said it was going to be easy. So here, if you're looking at the ZBs, it's a fairly labored process, right? So we're going in. So this was last Sunday open, a week ago, 2 weeks ago. So after we had that puke and that first attempt to break into the 152s, right? And here we're going through this labored process, right? Holiday week, and it looks like it's trying to base. So are we bullish bonds? Absolutely not. The only thing we're looking for is we're looking for that healthy retracement, right? And, you know, whether that's all the way back into the 55s, whether that's all the way back into the 58s, or whether that's all the way back into the 61s, we'll have to wait and see. Clearly, the primary move or the quick move we'd expect is up into the 55s, right? Try to take these stops out, these levels out. So, you know, we'll have to wait and see how this plays out. Yeah, you know, I agree. The moves have been, the market's been the moves haven't been that tricky, to be honest, right? The moves haven't been that tricky, but you know, that's one of the basic questions, right? So, okay, let me tackle this. This is an interesting one. I'm just going to try not to rant and put everybody off straight away early in the morning. Don't want Ray, you almost got me to start ranting on the Instagram posters. I'm going to back off for now. But, you know, the point is to see what's happening on the chart, I think we can all agree is not that complicated, right? The moves in play aren't that complicated. What tends to be harder is to turn that vision or that view of what is happening into translate that into profitable P&L, right? That's what most people struggle with, because as you know, you can give a lot of people a strategy that works, and you know most people won't follow it one way or the other. And yeah, so the translation of that is, you know, how to deal with fear of missing out, how to deal with not being stubborn, how to deal with position sizing. You know, as we discussed in the foundational series in detail, right? You know, you could have a clear edge, but if you get your bet size wrong, you're still going to lose money, right? And I just think it's the real culprit. The foundation is just people don't get the bet size right. You know, people just trade too big and they get frustrated and they chase, and that's what ruins the P&L. But it's as easy or as hard as that. You know, a lot of people spend time wanting to read more books, watch more webinars, follow more courses, God knows what, whereas they probably have a fairly decent understanding of what's going on. The problem is they just keep on getting the bet size wrong. And even though you have black or white rules on what that bet size should be, usually people's emotions get the best of them, and then they don't follow the plan. So there's no point having a plan in that case, right? So, and a lot of it boils down to experience, right? If you haven't had the experience of sitting through markets, sitting through cycles, sitting through irrational markets, sitting through boring markets, et cetera, it's very difficult to adapt and keep the bigger picture in mind, right? And a lot of people are fairly new to the game and they've only seen one kind of market, one kind of move, and they just think it's always going to be like that. So it's a tricky one. It just takes time. It takes screen time. It takes patience, and it takes having realistic expectations, right? Exactly. Yeah. What do you have a specific question on yen? So right here on yen, the way we're looking at yen here is, again, it's the same chart across the board, right? We had these little highs that were put in and this negative close on the daily, right, Simon? So here, the way we're looking at this is short term. As long as this holds, these highs hold, there's a chance to see a healthy retracement here. Now, keep in mind that with month-end flows and with the way the week is shaping up, we could still try and probe higher. So we're looking, when I say hold, I mean from a weekly close now, right? As long as we close below here, we'd expect it to be time to have a healthy retracement. And the healthy retracement for us means possible move all the way back into the 110, 109.50. If we close above that level, especially on the weekly or any day, and we get some traction, then the next level to the upside, that hasn't changed. We've been talking about this for a long time, is the 116, 116.50s. So our base case is still for dollar strength, right? And we think this would just be a corrective wave, okay? Retracement for then, rate hikes back on the table, et cetera, and ultimately this level to move back up. So I think the 50% you're talking about, Simon, is the take from highs to lows here. Correct? That's what you were looking at, I think, that it's past the 50%. Okay, so the way we look at fibs, the way we look at this kind of action, as far as we're concerned, this move retraced, tried to move down in extensions, printed new lows, and repeatedly failed. Does that make sense, Simon? So as far as we're concerned, and I'll put a little bit of theatrical context just to make it interesting, getting short into this 50 back is a piker play, is a sucker's play. To be more normal about it, it's a lower odds setup. On this kind of action and move back into the 50 back, our base case, and what I mean by that, I would say, over 50% of the time, we would expect the 61.8 to get clipped. Okay? Now, there's a lot of resistance here, but our base case would still be that 61.8 gets clipped. If we get daily closes, then you'll see most people try to wait for the 78.6 to get short. Here, I think we still got a lot of things that have to be tackled with in terms of central banks, what's going on, et cetera, et cetera. So I really don't think it's the market to try to make really huge, crazy, bold calls, especially into the end of the year, because we don't even hold over the holidays. We tend to flatten out at the end of the year to start fresh. But the way I'm looking at this is I hold the 50 back here for a continuation short holds no interest whatsoever for us, as this action here and this action here has invalidated the interest we may have had to play for continuation. That's just the way we look at it, okay? I hope that's helpful, or that answers your question. Okay, so right here, you know, even if you take the fib off that 5061.8, what you would expect is you'd see a lot of chop here inside. You know, you've got the 50 and the 200 and the 100 on this weekly, so you'd expect now a lot of chop here, and something really material has to change now for us to break out of this range. So whether it's going to be for an ultimately break to the upside, we think it'd be healthy for a correction first before we break. And if it's going to break down, which is not our base case, this would be a great place for it to do it from. Does that make sense? Baller, is this live? I think so, yeah. At least unless I'm living in an alternative reality, it's live, yeah. Okay. Yeah, that's a good one. So, but it's being recorded, right? It's being recorded. So we're going to do a couple of these today live throughout the day. And so we'll review anything under the sun, but they're being recorded. So I'll post it on YouTube. We'll probably try and do 30-minute, 40-minute blocks, so the recordings aren't too long, okay? Okay. Hey, Hussein, my pleasure. Crude, do you have a specific question on crude? I'm more than happy to discuss anything you want on crude. Yeah, what's happening on crude? So again, this is a classical day where newer traders, fortune seekers are just going to get their beep handed to them on crude, right? It's just very tricky, right? So anybody thinking they're going to trade extremely technical here, you know, I hate to break it to you, it's not that kind of day, okay? So exactly, right? Exactly. So we'll have to see what this is just going to be trading on the headlines, right? Yeah. Here, the classical thing you would expect is now they're talking it up ahead of the meeting, right? They say they have some kind of alternative deal. So what you would expect is for everybody to get a little bit excited, then they come out with something which is slightly disappointing, and you get a better chance to sell it, right? But unfortunately, we don't have a crystal ball, so we don't know what's necessarily going on, right? What I would say is that the same thing that we've said for a long time, the levels of, so there's a couple of things we would say, right? Is that we think that globally speaking, right? Let's just get on the weekly. Globally speaking, what happens? If crude starts to get up here, you'll get everybody under the sun producing, shale producers back, blah, 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 blah. You'll get a bunch of flooding supply on the market, and it's going to cap it, right? Most things being equal, it ain't going to fly, right? If we start to see crude puke down below the 35, you're probably going to see everybody under the sun trying to talk. You're going to get all kinds of people on the wires, all kinds of OPEC news, all kinds of stuff as people panic, and they'll try and prop it up. So as far as we're concerned, and again, we were aggressively short right? On the move down, then once we start to base, we got aggressively long for the moves back for those corrections higher. And now, after this move, and now we're in just wait and see mode. So we feel that our edge is trying to be nimble and try to play tactical inside this range. We're not looking for the next big move anymore, right? Into the 100s, you could be interesting to look at the big move. Into the 30s, you could be interesting to look for the next big move. As long as we're stuck in this, what you want to call it, 55, 35 range, we have no interest in trying to look for the next big move also because of does that make sense, Hussein? So we prefer to be tactical here. So having said that, for us, what is interesting? Well, yearly highs remain an interesting fade zone on no traction, right? 3880s and maybe into the 26s. Here, what you would expect is on some kind of a deal, initial reaction, probably, I don't know what, $3, $3, $4, finger in the air marketing or forecast, $3, $4 to the upside. And then as the market digests it, if it's really, it could probe higher. If it's not that good of a deal, then good shorts. On no deal, talk of no deal, $3, $4 to the downside, especially if it takes out this, we think it's a lot more aggressive to the downside. So we'd be a lot more cautious trying to fade longs on no deal and a little bit more aggressive try to fade shorts on a deal. Does that make sense? Does that help? But unless you're just finger on the button trying to deal, buy, no deal, sell, we think those bigger levels are the areas we're focused on or the areas we're a little bit more interested in. I couldn't agree more with your assessment of OPEC, but remember, our strong advice would be trade the chart, trade the levels, don't trade your opinion of fundamentals, your opinion of a news organization, your opinion of a politician. The only thing that matters is price and its location on the chart. So keep your leverage in check, focus on the levels, focus on your risk reward, and trade the levels. That would be our strong advice, okay? And which will probably mean you'll be around to fight another day should things go against you. Okay? Good stuff. My pleasure. Any comments, any questions, any chart anybody wants to look at, anything we haven't reviewed? Yeah, and again, that's another one which is very similar across the board is gold, right? What's happening on gold? So gold is holding fairly heavy and similar to yen, right? You see it's exactly the same. You remember, it's pretty much the same trade across the board. The only interesting thing we have going for us as traders is that you've got X number of charts, 10, 12, 9, whatever charts you follow. And broadly speaking, the timing might be slightly different where something may be leading or lagging, but it's pretty much the same trade. It tends to be 90% of the time, it's pretty much the same trade. It's some kind of a dollar trade, right? So the beautiful thing, without limiting yourself to one chart, saying, oh, I'm a euro trader, I'm a cable trader, which we feel is extremely limiting. You're putting handcuffs on yourself, which you don't need to have, is you get the chance to express that view or that trade through the chart that offers you the best, the best risk reward, the best location, right? So, the same way we discussed that it was all about that high that had printed on yen, it's all about this low that's printed on gold, right? So if this holds in terms of a weekly close, we expect the path of least resistance is for some kind of a bounce, right? Now, in this month-end flows, OPEC, you could get a lot of wheeling and dealing. But if you keep in mind that, this will be tend of like, risk on, risk off, safe haven flows, etc. If you're thinking about it, you've got a lot of political risk across the board. What's going to happen in the U.S.? You've got a lot of potential risk with OPEC not finding a deal, right? You've got Italian referendum, could be a little bit of wheeling and dealing. So all things being equal, that should be fairly favorable conditions for gold until the rate starts rising again. So here the base case would be that as long as those lows hold, especially from day closes, week close basis, it would be healthy to see some kind of a bounce. Now the question is, what is some kind of a bounce? Well, in a similar fashion to that euro, which, very similar chart, even if you're looking in terms of descending trend line, moving averages, you would say, this break zone should be solid and should hold, right? I think that as long as you don't have a day close above the 1250, chances are this will continue to hold heavy. This will continue to try to trade lower. If you get a day close above the 1250, then expect an awful lot of people to be caught off guard and see possibly an extremely aggressive move back into the 1300. I don't think you can consider that base case right here, right now. It's a bit too early to consider that base case. So I think here on a hold of these lows, primary should be to look for a bounce into these, 1220s, 1240s. That should be the base case here in terms of primary move. But again, a lot of selling to be done. We've got month-end flows. We got this OPEC meeting today, so we'll have to wait and see, right? Exactly. Okay. Any comments, any questions? Any chart we haven't looked at? Any chart anybody wants to look at? No more comments, no more questions? Okay, look, we'll be running for about half an hour, over half an hour. You know what? We're going to adjourn now so I can stop the recording. I'll post it on YouTube. Give everybody a chance to think of some charts they want to review, some questions they want to review, right? I'll keep the room open, and heads up on Twitter. I'll post a little tweet or something to say when we're going to go live again. Okay, I'll catch you guys in a bit. I'll shut down the mic, but we'll be back in a little bit. Okay, have an awesome one. Thank you so much, guys. Catch you in a bit.